when you come to Forex, you'll be using the MT5 most times, or the MT4, depending on whichever one you choose. But the MT5, you know how to trade cryptocurrency, you wouldn't know how to trade Forex, but it is not so. The only differences that you may experience is the instruments, the tools, the applications, or there's just a few peculiarities that can give a little difference. What you need to know is that the way you fundamentally understand how it works is also the same way you understand how the technical works. The MT5 is newer than the MT4, and so most times people tend to use MT5 because it has a lot of updated features, that makes it easier, to either execute a trade or to exit a trade. But I just wanted to know that whether MT5, MT4, those two can be used for Forex. Hi everyone, I want to welcome you specially to this episode, the episode 4 of our beautiful podcast on the basic trading foundations. Now this is a trading teaching series that would help you, guide you in your trading journey, your trading career, and whatever you're doing in trading, and help you think right. Because a lot of people come into trading with the wrong notions, wrong ideology, wrong mindset, and this basically forms their psychology, and this automatically makes many to have the wrong psychology in trading. Like we would always let you know that trading is 80% psychological and 20% technical. So that means you play more, your psychology play more important role in your success as a trader. So you have a bad psychology, then you've got a problem. You have the right psychology, then you are good to go. In this particular episode, I'm just going to read to you a part of our book, which would help you to learn a few things about trading. So we started up from episode 1 to episode 2, 3 with the introductory part, and right now I'm going to be taking you into what I call understanding Forex and crypto markets. Now I'm going to read this first article and speak to you briefly on it. In the world of trading, understanding the markets you are operating in is crucial to making informed decisions. Both Forex and cryptocurrency markets present unique opportunities and challenges, but they share common principles of market behavior and trading dynamics. In this session, we will break down the characteristics of each market, their key differences, and the factors that drive the price movements. Now, I'm sure you want to see all of those details, but I would like you to know that you will need to get the book, because in that book I delved into all the information that you need to see on that. So I may not be giving you all of that in this particular podcast, because this podcast is not practical. This podcast is more of psychological, as I'll be bringing you words that would align your thoughts rightly, guide you rightly to think rightly about trading, and also correct certain wrong notions, and make you have the right understanding about what trading is about. But I'm going to pick a few things from the lines I just read to you, and one of which is the fact that there is a peculiarity between cryptocurrency trading and Forex trading. The both of them look so much alike. In fact, they are more like twin, and that's why in our academy we say Forex Crypto Trading Academy, because they both are similar. A lot of people think if you know how to trade cryptocurrency, you wouldn't know how to trade Forex, but it is not so. The only differences that you may experience is the instruments, the tools, the applications, or there's just a few peculiarities that can give a little difference. But what you need to know is that the way you fundamentally understand how it works is also the same way you understand how the technical works. I give an example, and one of those examples is when you come to forex, you'll be using the MT5 most times, or the MT4, depending on whichever one you choose. But the MT5 is newer than the MT4, and so most times people tend to use MT5 because it has a lot of updated features, that makes it easier, to either execute a trade or to exit a trade. But I just wanted to know that whether MT5, MT4, those two can be used for forex trading. Now, what you also need to understand is that the brokers that provide you opportunity to trade as a retail trader in the forex market also provides you an opportunity to trade cryptocurrency. Take for instance, you have the privilege to trade Bitcoin against the US dollar. You can trade against USD or USDT, which is Theta. So any of these two is still cryptocurrency. So you can now see that there is a bit similarity to it. The technical way of analyzing the market is still the same technical way of analyzing the cryptocurrency. There are just some few people who have some few peculiarities with their strategy, but for me as a person, the strategy I use in trading forex is the same strategy I use in trading cryptocurrency. It's the same strategy I use in trading synthetics, CFD, and stocks. So because of that, I am not limited to what I'm trading. I'm able to trade anything possible that has to be traded or can be traded by analyzing with my personal strategy, and I win all the time because I have a very unique strategy which I got over the years, having been in the market for a period of time for at least more than 8 years, and I've back tested this strategy many times and I've seen it win many times. I can now be confident to say that. But you also can actually find yourself in that position as to creating a strategy for yourself that works. This is part of what I taught in the VIP course, one of my VIP courses. And if you subscribe to our VIP channel, you will have access to that course. And having gone through the course, you will learn how to create a working strategy, how to make and personalize your working strategy, how to test your strategy to know if it's working and if it can give you the result, how to create it, how to make it, how to use it, and how to grow from that level. So just like what I've said so far, same way in cryptocurrency trading, there are exchanges that most people use. We have the Bybit, we have the Binance, we have Qcoin, we have there are many of them like that. So these exchanges provide you also interfaces where you can actually trade. And I want you all who are into forex trading strictly to understand that it is almost the same thing. There's just a few differences as to how the exchanges have programmed their futures, and you can actually learn all of this. I have a couple of videos on that. I think I have one that is still on my YouTube channel, which is on how to use the Bybit app. I used to have one on how to use Binance, but that was not on the Academy channel. It was on my personal channel, and for some reasons that video was taken down. But I'm going to do more videos with regards this on how to use other exchanges, so that you come on Qcoin, you know how to use the exchanger. You come on Bybit, you know how to use the exchanger. You come on Binance, you know how to use the exchanger. It is not difficult. It's something that you can actually get on the app and learn yourself, because most of these apps are users friendly. So this is just to let you know on this episode that there is no much difference between the forex trading and the crypto trading. Both of them are like twin. They're actually just alike, and you cannot say you are good in forex and not good in crypto, because as long as you are good trading forex, you will definitely be good trading crypto. And just the same way as to trading synthetics or whatever the other ones. Then what you do, should in case you thought, okay, fine, I did what you just said, I used the knowledge of forex, I went into synthetics and I got bonds. One thing you must understand is you must study first and learn their little differences, as there are some differences, as I stated on this book for forex and cryptocurrency. Part of the differences I will mention again in this podcast is that the synthetic is very volatile. Okay, the forex is less volatile than the synthetics. And now even in the forex, we still have some instruments, or rather some pairs that are even very much volatile. Like you talk about gold, you talk about silver, they are very volatile. Even Bitcoin is very volatile, and if you're trading any of these instruments or pairs, you have to be very careful. You have to be, you have to understand their volatility so that you do not, blow up your accounts unnecessarily or make the wrong decisions because of their volatility. A lot of people don't know this, and that's why they got on trading. They say, oh, I want to go on Bitcoin because it gives me a lot of profit. But what you need to know is volatility really matters, and that's one of the problems with synthetics. In fact, there are some synthetic instruments that are more volatile than the other. Take for instance, we're talking about Crash 500, we're talking about Boom 500. These ones are less volatile, and that's why for me, for those of you on the VIP channel, you agree with me that most times we trade Crash 500, Boom 500. You don't find me trading Crash 1000, not because I don't want to trade it, but because it is more volatile than Crash 500. So if I'm going to do 1000, then I will need more funds that can help me cover up for the high volatility of this. So the synthetics happens to have different variances with volatility, and so because of that, some people approach the synthetics and they get burned, and they thought, oh no, it's a bit different. But no, the synthetic can be understood, it can be perfected, just as the cryptocurrency, just as the CFDs and the stocks. How do you perfect it? First of all, find out what's the volatility of the various instruments. You're talking about volatility 25, you're going to find out how volatile is it, okay? Or you're talking about volatility 50 or 75 or 100 or 150. How volatile is this instrument? What lot size can I use to take one position at a particular equity or balance that will give me so and so value, and I will not be blowing up my accounts, but rather I'm going to be making profit? This is how you can approach the synthetics, and you will find yourself make progress in trading synthetics. Try these on stocks, try these on cryptocurrency, try these on CFDs, and you will find that it is easy to trade whatever is tradable. This is what I want to bring to you on this podcast, to let you understand the peculiarities, to make you understand the little differences, to make you understand that as long as you are a profitable trader, you can trade anything tradable and you will make money on it. I'll be expecting you to look forward to our next podcast, which is going to be episode 5. It promises to be very interesting, it promises to be very inspirational, as so much value will be put in the next podcast, and that will help you make progress and advance in your trading career. See you in the next podcast episode. Enjoy your trading career. See you soon.